Let's go back to our talk that we have going on with Oliver Sloup, shall we? And he is located in Chicago. Overall, I have to say I've been mildly impressed here so far today, Oliver, especially with the feeder cattle market. Even when you have a little bit of strength in the corn, you have the feeders actually trading a little higher today. What does that mean as far as your reading of how strong this feeder cattle market is right now?
It is pretty encouraging, but I would take it with a little bit of a grain of salt. We saw a pretty sharp sell-off there last week. We traded for the September contract up near 165.5, all the way down near that 160 handle. So we sold off pretty good. I think the market's just trying to catch its breath. And if we break and close below that psychologically significant 160 level, we could start to see some additional pressure come into the market, especially if corn can kind of gather itself and find some momentum to the upside. Conversely, if corn really falls out of bed, we could be back at those new highs very short order for the feeder cattle contract. So corn is going to be something to keep a very close eye on there. And as far as the live cattle goes, the October contract is really where we have our attention. We got towards the top end of the range last week. And that, when you look at the top end of the range, that generally represents a pretty good opportunity from a risk-reward standpoint to look at the sell side. Couple that with a bearish seasonal coming up right around the corner, and I think the market may be a little bit due for a pullback. Now, I'm not looking for the market to fall out of bed. I'd be looking at a pullback as a buying opportunity, especially in some of those deferred contracts like the December futures.
All right, so far on live cattle, we have that October contract that you were just talking about. It's now quoted 15 cents higher at 127.35. But those far out deferreds, you go out to those spring months and you have April 75 higher this morning. It's now at 139.95, so very strong on the deferred months. And now it's kind of turning out that way on the feeder cattle market as well. Earlier, it had been the reverse. Right now, you have much more strength in the deferreds. The September feeders, well, they're quoted 95 higher at 162.75. But you have October, November, January, all over $1 higher right now. Now, meanwhile, in our lean hog trade, you have October 90 higher at 88.92. That would put us about 20 cents from our high of the day, about 70 cents away from our earlier low. When you look at the lean hog chart overall, do you think it's on firm footing today?
Well, it's stabilizing, that's for sure. We saw a pretty sharp sell-off last week on the back of some ASF rumors and confirmation of that in the Dominican Republic, and just catching our breath. We continue to be leaning a little bit more on the bearish side here in the very near term, looking at the seasonality of things. August is seasonally a weak time of the year for the lean hog complex, so we're continuing to look at rallies as selling opportunities, especially for those who are looking to lay off some risk.
Okay, Oliver, great stuff. Thanks for talking with us. Oliver Sloup of Blue Line Futures. Janet, back to you.